people, and if they can be fooled, every single person I ever talk to has to realize they have to put their ego on hold and say, you know what, I might be able to be fooled too. What's fascinating about the ZBES cases, number one, we had the real division at ZBES that cleaned carpets. We had the fake division that did restoration work. The real division had hundreds and hundreds of employees. The fake division had one employee, me. I supposedly found all the jobs, bid the jobs, hired all the outside work crews, and handled all of the jobs. That very thing should have been probably the single biggest red flag that ever could have existed. That is the thing that I think, above all else, forget even the 50% profit margins, someone saying, how is some one person able to handle this entire workload? And what I ended up finding out was that, unfortunately, well, let me put it this way, and I hope I'm not going too far astream for you. Accounting work, especially accounting work, accountants are the most important part of the triumvirate, because you can get another banker. A bank loan can fall apart, and you can maybe replace that in a matter of days or hours. And I'm not trying to be besmirching anyone, but lawyers are pretty easy to find. If one law firm doesn't want to work with you, some other law firm would. But accounting work takes a lot of time. And you can't just say, I need an audit tomorrow. And if you fire your auditor, that sends shockwaves through all of corporate America. They go, oh my God, they fired an auditor. How could that be? So you kind of have to a little bit coddle the accountants. But what I tried to do with all of those people in the triumvirate is basically convince them to do all the lifting for me. Most people think that a fraudster like myself try to outsmart you or try to manipulate you to get you to do what you don't want to do. We do the opposite. We always act dumber than we really are. I'm always remembering Senator Sam Ervin during the famous Watergate hearings when he'd go, well, I'm just an old, dumb country lawyer. Yeah, grab your wallet and run when somebody says that. Guy's sharp as a nail. And so what we fraudsters do, we act a little dumb. I say to an accountant, I don't understand what it is you're doing, so that when I give you my paperwork, if it stinks or doesn't look right or isn't totally there, you forgive me, because you go, Mark doesn't understand what's going on here. We set the expectation level low, rather than trying to blow you away with how clever and how sharp we are. Then you basically, by accepting my work at some point, tell me what your benchmark is. It can be high, it can be low, but as long as you tell me what it is, I'll always give you just exactly enough to squeak by. And in that way, I get you to do the heavy lifting for me. No fraudster would ever make it, ever, trying to force you to sign something you don't want to sign. Human nature won't let you do it. But if you signed 100 things before, it's just another one. Oh, and sign this one too. People get suspicious when they think they're trying to be forced into something. What they have to be worried about is the exact opposite. When they did it all of themselves, and they wake up one day going, how did I talk myself into doing that? And this is the biggest irony. Of that entire division, no one ever saw or asked to see one original source document. They never saw one invoice that had been signed. I did hundreds of millions of dollars of transactions using cashier's checks, where I would buy a cashier's check, which the check you use to buy a cashier's check is made out to the bank. I would then take the cashier's check. I would Xerox it, because they were always made out to me. The check was made out to me, and I'd go cash it. But I first would Xerox it. Then I would white out my name. Then I'd type in the name of some bogus vendor and give that Xerox copy back to the auditors. Out of a few $100 million worth of checks that were written, the auditors never saw one canceled cashier's check. They would simply see the check I used to buy it and my Xerox copy, and they accepted that. I can tell you, because, see, since there never were any original documents, there only were Xeroxes, that they didn't exist. But isn't it ironic? Not one person in that entire chain ever asked to see an original source document in the entire restoration division. What's funny about it is the first time Barry Minko ever made up a fake job, he didn't have an invoice to write on. So he took one of our standard invoices that I would give to Mrs. Housewife to clean her living room and dining room and hall carpets for $39.95. He used that same invoice to draw up about a $50,000 insurance restoration bill. And then that escalated to a couple $100,000, and pretty soon he was drawing up fake work orders in the millions of dollars. And the bid and acceptance was all the same piece of paper. Also, it was the front side of one sheet of paper. We would bid a $10 million construction job, and the entire bid and specifications would fit on the front side of one page. Well, anyone who's ever done construction would tell you that a bid and acceptance for a $10 million job would look like a small phone book. And yet we just did it on the front side of one page, and no one ever said, is this the industry standard? One day, one of the civil attorneys in the civil case, one of the plaintiff's attorneys came to me and said, Mark, were there ever any questions you were afraid of? And I said, yeah, like a million. He said, could you just write down during lunch today some questions that people had asked you had no answer for? Well, I wrote 200 of them in one lunch period, and each one of those were of the type where I really couldn't even dream up a fake answer. So I sat there in constant fear that someone was going to ask these things, and lo and behold, no one ever did. No one ever said, where's your license number? No one ever said, how do you pull your permits? No one ever said, how do you manage to oversee all those jobs and go to the bank every day? And yet it was common knowledge. You could tell by the dates of the checks that I wrote that I had to be at the bank that day. And yet no one ever asked. A lot of that is because the way compartmentalization works, especially at big firms, is such that truly the left hand doesn't know what the right hand's doing. One auditor is doing your bank reconciliation, another one's looking at your inventory, another one's checking your receivables. They don't talk to each other, they don't look at each other, they have no idea, and they're in a hurry. No one ever talked to our vendors because, I can't stress it enough, we didn't have any because they were all fake. And what I did was I invented 6 vendors. One of them was a company that I owned called Marble Management, and the others were post office boxes. I just went out and rented post office boxes, made up companies, made up invoices at the print shop, and filled out the invoices and handed them to the auditors, saying I'm doing millions of dollars worth of work with, say, for example, this company I invented called Tuftex Carpet Company. Then the auditors would mail verifications to the post office boxes that I had rented. I would verify that they do all this business with me, and I would send them back. To show you, not only was there virtually no due diligence was ever done on our vendors, because had they looked at our #1 vendor, they would have found, by simply running a Dun & Bradstreet or simply looking at the Secretary of State, looking at our DBA, they would have discovered that that corporation was mine. None of the bogus vendors had any phone numbers. Their invoices never had phone numbers on them, just an address, and the address said Suite 104, 106 instead of post office box. Because most of the places I rented boxes from would allow you to do that. No phone call was ever made to a vendor, and to the best of my knowledge, no attempt was ever made to go see one of the vendors. And all of the vendors supposedly were within about a 3 square mile area, right there in the heart of LA, so they could, and actually the heart of the San Fernando Valley, within blocks of the auditor's office. Blocks. I think the biggest lesson that has to be learned is that if for no other reason than so it doesn't even appear to be a conflict of interest, you must periodically bring in outsiders who have impunity from offending you. I've talked to quite a few companies that have said, Mark, we believe that our internal ethics group is good enough. And you know what? They might be right. But it's almost always the belief that the real loyalty that any internal auditor, any ethics person, or any compliance officer has is to the company that pays him his check, for God's sakes. And that's why I've often said, even if you think you can handle it all in-house all the time, bring in an outsider who's got a fresh pair of eyes. There's no nepotism. There's no favoritism. He's not worried about losing his job. He's got a retainer with you. He's going to get paid, and then he's going to go away. Those things are really necessary because, one, they give comfort to the investors and to the shareholders. Remember, they're the real ones that need these kind of protections. And so we can pass new laws, we can have the Sarbanes-Oxley, we can change the FASB recommendations, we can change a whole lot of things. But until companies say, we have to be Caesar's wife, we have to be above reproach. And about the only way you can do that is to bring in someone whose loyalty is hopefully to the truth instead of to the keeping the company going. And I think that is, without a doubt, the biggest message. The other message is this. Yes, there's a possibility that a corporate executive that does bad decisions might go to jail, but not realistic. That's not the real reason to fear. We don't see our jails bursting with white-collar guys. The thing to fear, and it's not even the money you can lose by running your business or spending a little bit more of your productivity on ethics and compliance. The problem is that we've evolved to a point where your company can lose tens of billions of dollars in worth simply because of the way you handled something. We've seen WorldCom lose over $100 billion in market cap, Enron lose $90 billion, Citigroup lose $50 billion. These are serious numbers. Those aren't fines or penalties. That's what just dissolved because of the way the company handled certain issues, and invariably in those issues, due diligence was involved. So ethics were involved in the planning of it, or lack of ethics were involved in the planning of it, a lack of due diligence on the people who were hired to do due diligence, and a total lack of follow-through. Lastly, I would say to somebody, you have to have the personal courage and integrity to say, I will walk away from this job as much as I want it, as much as I want my kids in private school. I will walk from this job if this activity continues. I will be the whistleblower. We cannot tolerate this and have it here. And that is very different from what's been before. And if there is a lesson to be learned by the recent scandals and by the analysis that I bring to fraud prevention, fraud detection, it is that. Well, I think the most important thing any individual can do is there are things they can do to indemnify themselves, to protect themselves. And I should tell you, nobody else is going to do this for you. Most people that are in federal prison today are in prison because a co-defendant told on them. There is no honor among thieves. And the way the system works, somebody goes, Mark, if you can give me a bigger name than you, you go to jail for less. So how does a low person who doesn't really have anyone to give away and might get blamed, how do they protect themselves? And so what I tell every single accountant I meet to do is to do this thing that I developed about 10 years ago. It's not brain surgery. It's called the 2-minute drill. And I say every single day that you're at work, spend 2 minutes, only 2 minutes, doing some kind of extra due diligence. Go online and check industry standards if you don't understand a company that you're doing auditing work for and you're not really sure whether you're being told the truth. Call a bank reference. Check with Dun & Bradstreet. Check to see if they're incorporated properly. See if they pull the right permits for safety violations or whatever it might be. See if they pay the proper sales tax. Visit one of their vendors. If anybody had driven by one of the ZBest vendors, they'd have seen that it wasn't a vendor at all, that it was just a postal rental place. Every day, do 2 minutes of extra due diligence, and then make a journal entry of it. Keep a diary, send an email to somebody that you trust, address to them, and then walk away from it. Because what you'll have is at the end of a year, you'll have about 250 a list of 250 things you did you weren't required to do, and you did them just so that you could see if there was something hinky or fraudulent or bad out there. At the end of 2 or 3 years, you'll have a volume that you'll be able to show to somebody, because in this day and age, and it's an awful thing to have happened, you frequently have to prove your innocence. It used to be, no, you're innocent until proven guilty. Just ask Martha Stewart. That's not true anymore. And especially in the court of public opinion, which, as I just mentioned, sometimes is a lot more important than what goes on in any courtroom. Only you can do that to indemnify yourself. Then if a fraud happens, if something happens, and a decision maker, read that as a prosecutor or a civil litigant, has to go, I'm either going to lean this way on this person or I'm going to lean that way, they will always lean in your favor, because they'll go, I've seen what kind of person this guy is. This is a guy who goes the extra mile, who really looks for this.